With the Investing News Network, I'm Scott Tibbles. I'm here at PDAC 2020 in Toronto. It's day 3, and joining me now is Alex Laugharne. He is Principal Consultant with CRU Group. Thank you so much for joining me, Alex.
Oh, it's great to be here, Scott.
So, there's a lot of news going on right now with the effect on base metals from the coronavirus scare. Could you just give me your thoughts? How has the outlook for nickel changed since the start of 2020? It's such a rapidly changing story.
Well, I think it did, like you say, it's such a rapidly changing story that I think we're yet to fully see the impacts throughout the value chain and therefore understand exactly how large the impact might be on demand for nickel. Obviously, it's a detractor, and I think when we do finally get around to revising our forecasts, our outlook for 2020 will be lower than when we previously forecasted at the end of January. It's pretty hard to say to what extent it will be lower because I think we're yet to see the full effect through the value chain. I can say I was talking to some of our copper analysts earlier, and they've factored our Chinese growth forecast in 2020 down from, I think, around 2% to very little at all. So given that nickel's used obviously in different applications, the impacts will be slightly different, but I think it's fair to say that it will have a negative impact on demand for 2020, quite obviously.
And when do you think CRU Group would be thinking of updating your outlook? How far away is that off, or are we still far too deep in the situation to really be able to give a clear view?
I think in terms of understanding the full impact of coronavirus, I think what we need to see really, I suppose, is the extent to which the virus remains relatively China-contained versus, affecting the rest of the world. In general, CRU updates our forecast on a quarterly basis, so the next one would be at the end of April. But we will put out more frequent information to the market when we're able to, or when there's a call for it.
So we're going to stick with nickel generally, but how has nickel been affected relative to other base metals? Has it been relatively unscathed, or has it been hit particularly hard? What's your assessment?
I think it's certainly too early to say, really. Like I say, copper we see, that's used across a wide varieties of applications, and we understand that, it's broadly seen as a proxy for macroeconomic health, and we expect that to be dragged down. I think nickel, a lot of the focus is on the battery metal side of the equation, but realistically it's still 70% consumed in stainless steel. That's used across a decent amount of applications, maybe leaning more towards consumer goods and the industrial space than sort of more fast-moving goods, for example. So it's really hard to say whether it would be hit more or less than other materials.
And do you have comment on the prices? So about this time last year, PDAC 2019, nickel was trading at about $1,300 on the LME. Now it's at about $1,200. That doesn't seem like it's gone down by all that much, but there was a big spike in between when it got up to well above the 1800s. What are your thoughts?
So that spike we saw in the third quarter of last year was driven almost exclusively by the actions of the Indonesian government, who reintroduced a ban on the export of unprocessed ores earlier than had been anticipated. So they brought that forward to be introduced from January 1st, 2020. And this led people in the market to, I think there was both some sentiment-driven activity that pushed prices up, and also some movement forward of people trying to get hold of material before they, in theory, got cut off from the market. That came down pretty quickly because it wasn't really supported by the fundamentals. Even with lower output of NPI as a result of the absence of traded nickel ore from the market, demand through 2019 had underperformed, I think, because of general weak macroeconomic health caused, with the US-China trade war being a big part of that, meant that refined nickel demand through 2019 had underperformed. The overall market was pretty weak, so that spike in prices we had as a result of the Indonesian announcement wasn't really supported by the fundamentals, and that's why we saw within a month or so prices came back down to pretty close to where they were before.
And what is the CRU Group's analysis of the Indonesian ban?
It's an interesting one. I suppose, from a broad perspective, miners around the world generally, are negative on policies that would be perceived as resource nationalism. But from an Indonesian perspective, and within nickel, it's clear that the ban on the export of unprocessed ores has driven a huge amount of downstream investment, not only in the conversion of nickel ore to nickel pig iron, but then also even into the stainless steel sector. And so from an Indonesian perspective, that has driven a lot of value add within the country. It works better in nickel than it does in other commodities because Indonesia has such a important control of the seaborne ore trade, and there weren't many alternatives for people looking to get hold of that ore. And that's why in this case it has been quite successful in driving that kind of investment downstream, albeit predominantly from the people that would have been the Chinese consumers, Tsingshan most importantly, that would have been purchasing nickel ore from Indonesia and converting it through to NPI. It's these sorts of players that are predominantly investing in Indonesia, in NPI investment there. So they simply moved where they're spending their money from China to Indonesia. But from a governmental perspective, obviously that's beneficial.
And what would be your assessment of how much of the nickel price right now could be credited to the coronavirus situation going on right now? Because, as I've said, nickel was at 1,300 this time last year. It doesn't seem to have moved all that much.
Yeah, so I would say that the losses we've seen over the past week or two have, almost exclusively that's a coronavirus impact. I think we're still in a moderately weak macro environment with the Chinese New Year and then the long break kind of resulting in the coronavirus. So that's certainly why we've seen that loss this week. And I think CRU's forecast for 2020 as a whole, we would expect prices to be around $14,000 a tonne on the LME. So we're clearly expecting a pick back up from where we are at the moment. Although obviously the downside to that is the extent and the length of the impact of the coronavirus.
Do you have commentary on the news out of Indonesia just in the past few days? Reuters was reporting that the Indonesian government was saying that some projects could well be delayed, mainly, and Tsingshan project could be delayed due to the coronavirus. Is that changing anything to do with your forecast?
Well, the activity around development on the supply side within Indonesia is really the big uncertainty, and particularly not just around the nickel pig iron, but predominantly at the hydrometallurgical HPAL projects that are currently planned in the country, using a technology that is proven to have significant capital cost overruns and real challenges in getting their utilization up across many recent historical examples. These projects are under development, and they're going to be really important in terms of meeting the demand for battery-appropriate nickel looking forward into the future. So there's already a huge amount of uncertainty about how realistic is it that these projects will ramp up on the schedule that the operators are talking about, and come on stream and then ramp up in the schedule that's been talking about. And even prior to the impact of the coronavirus, one of these projects was pushed back by 6 months, and they've gone back to do additional engineering. So it's very hard to say, because that's really is a little bit of a black hole of information, and it is the key uncertainty for the nickel market going forwards, is the viability and the future output from those operations.
And speaking of the nickel market, it's a common refrain that one of the big upsides for nickel is the battery metal potential and its role in EVs. Do you think that the current happenings around the world, China's shut down, base metals down, does this change anything for the EV story, or is it just is that an industry that's going to be able to sort of ride this out pretty smoothly?
I think that I wouldn't quite say inevitable, but the drivers remain incredibly strong towards increasing nickel use in batteries. The EV story is not going away. Surely, the impact of reduced subsidies within China and the impact of the coronavirus will push things back slightly, but we're going to see more nickel intensity in batteries, and we're going to see more EVs on the road using more nickel. There's the barriers against that change. Those changes are being put in place, and it looks quite hard it looks pretty inevitable that that's going to happen over the next 5 or so years. So we're going to see much more nickel used in batteries, and it's going to emerge as an even more important driver. As a driver of growth that's far more important than stainless steel, where most nickel is used at the moment. So I would say that certainly, yes, these are hurdles in the way, and they're going to slow things down to some extent. But in 5 years' time, we're going to see a lot of nickel being used in batteries.
And sticking with the EV market, so a few weeks ago it was revealed that Tesla was in talks with CATL in China to use nickel-free batteries. Now that's fairly unusual for people that are familiar with the battery metals story. Usually it's cobalt that we're targeting, but now Tesla's interested in getting rid of nickel. Would if they were to succeed with this and go ahead with selling nickel-free batteries in China, does this upend anything for nickel's battery future, or is it no big deal?
I wouldn't quite say no big deal, but I'd certainly be leaning more to that side of the equation. I think what it provides, and so the rumor is that CATL will be providing lithium iron phosphate LFP batteries to Tesla for use in, I think, basically. These sorts of batteries they've been prevalent within China for a long period of time, so this isn't some new technology that is under discussion. It's, if anything, it's quite old. LFPs are much cheaper and also provide additional they provide safety benefits over NMCs. They have less of a challenge around some of those aspects. I think from a Tesla perspective, it makes sense in that they can provide a Tesla-branded product that meets a need within the Chinese market for a lower cost but shorter range vehicle. And as such, I think that, to some extent, will help them, sell vehicles, get ramped up in some extent, and then we will continue to see a shift towards NMC and higher nickel intensity batteries up with time.
Fantastic. Well, then I think that we'll wrap it up there. Thank you so much for taking the time to have a chat with me, Alex.
Thanks a lot, Scott.
And again, I'm Scott Tibbles with the Investing News Network, and I've been having a chat with Alex Laugharne of the CRU Group.